Hello and welcome to this tutorial on the basics of bonds and fixed income investments. In this video, we'll be taking a look at what bonds are, how they work, and why they're a key component of many investing portfolios. Bonds are a type of debt security. When you buy a bond, you're essentially lending money to an organisation or government in exchange for periodic interest payments and the return of your principal at the end of the bond's term. When an organisation or government issues a bond, it agrees to pay you a set rate of interest over a specific period of time. You can think of this like a loan you would make to a friend, with the bond serving as a written agreement between you and the issuer. There are several advantages to investing in bonds. First, they offer more stability and predictability than stocks, as they tend to perform better in bear markets and offer a more reliable source of income. Additionally, bonds are often used as a diversification tool, helping to reduce overall portfolio risk. There are several different types of bonds, including government bonds, municipal bonds, and corporate bonds. Each type of bond offers different benefits and risks, so it's important to understand what you're investing in and to thoroughly research the issuer. You can apply for bonds with both governments and corporations through a brokerage firm or investment advisor. When you buy a bond, you can choose to hold it until it matures or sell it on the open market if you need to access your funds before maturity. To conclude, bonds and fixed income investments can play an important role in your investment portfolio. Whether you're looking for stability, predictability, or a diversification tool, understanding the basics of bonds is a crucial step on the path to making informed investment decisions. Thank you for watching, and I hope you found this tutorial informative and helpful. Drop us a like, and we'll see you in the next one.